stock market is crashing. It is crashing and everybody is freaking out. You open up your phone and little red line's going down, right? Everybody thinks the real estate market's gonna crash and here it comes, everything I've been bracing for. Just one second, let's talk about this, people, let's talk about this. So yes, we're seeing the stock market, I'm gonna say crash a little bit, and that is because we've got interest rates that are starting to spike and people are fearful, it's a lot of this stuff is driven by fear, fearful that the real estate market is going to crash as well. Now, let's talk about this. Yes, I am a realtor, but this is great for you because I'm the person that's sitting and looking at all of the offers coming in and all of the cash that is purchasing homes, and I want to bring all of the information that I have to you. So first and foremost, no, I do not believe that the housing market is going to crash in 2022. There's another term that you're gonna start to hear a lot of this year, I almost guarantee it. And instead of a real estate crash, that's going to be a softening of the market. What does that mean? For the last actually since even COVID, when people were fearful of the market crashing in 2020 and it didn't, we had very, very low interest rates. And so buyers kept buying with masks on and gloves and everything like that, but people kept buying. What happened was we don't have inventory. We still don't have any inventory. So a lack of inventory in real estate creates a supply and demand issue because we don't have the supply and the demand is all being fed with the interest rates low. That is creating the housing market prices to increase. Now, here's the thing. When interest rates go up, which they already have, by the way, and we're expecting them to do that a few more times in the year 2022, because those interest rates are going up, what we're going to see is, and that softening, a little bit of that slowdown of the market is going to be all of the buyers who are just a tad scared. They're the people that think that 3.5% or 3.75 is scary and a big interest rate. Let's actually just pause right there for a second. So I am going to try to get you to understand that if you saw a friend buy at 2.75 and you have to buy a house at 3.75, that's not a humongous deal in retrospect to the real estate market. When I was a kid, my parents were buying in the teens. Their interest rates were in the teens. So 3.75, guys, is still a very low interest rate. Regardless, we're still going to have some scared buyers. And so buyers are gonna back off for a second. Now, here's what I wanna tell you. I wanna actually use a real life example. I just listed a house 2 days ago, okay? So I listed on a Thursday and I didn't even allow showings until yesterday, which is Friday. Friday morning, before any showings even started, I had 7 cash offers on this house that were either at list or $10,000 above. That's no joke. Today, I have 15 offers, so we still have a supply and demand. And that's not just one example. That's all across Las Vegas. And I know that Vegas is going to be a humongous market because we have a humongous influx of Californians coming here to purchase, but that really is nationwide. That's around the country. We are still seeing lack of inventory, somewhat low interest rates, supply and demand issues, and a ton of cash. So our housing market is still going to increase. Our housing prices we're still going to see increase. Now that softening may happen when the buyers start to back off a little bit. Sellers are still going to want to sell because they've got a ton of equity. The problem with sellers selling is that they also become buyers. And that's the scary part for a lot of sellers. They're selling and making $100,000 or $200,000, but then they become buyers and they're a little more fearful. If we can just get rid of some of the scaredy cat buyers, we may be able to have just a smidge more inventory. What's something else that we need to be thinking about? Rental rates. Rental rates are just starting to go up, and I really want people to understand that we're probably gonna see a huge influx in rental rates. Usually when a housing market climbs, rental rates are right on the heels, and we're seeing that already. So if you have cash investors that are purchasing 3-bed, 2-bath homes that are 1,500 square feet in Las Vegas for $350,000, $360,000, they're not gonna turn around and continue renting those homes for $1,600. They're now going to demand $1,800 or $1,900, and with buyers backing off, that means that we have more investors, cash investors purchasing the homes, and rental rates are gonna start to rise. So if you are a renter and your thought process is, oh, the interest rates just went up, I'm just gonna continue renting. You're just gonna be renting for more 1 year and 2 years and 3 years from now that maybe it would be worth purchasing a home with a slightly larger interest rate than you would have had 6 months ago when you have the full picture. So that's kind of what's happening here in Las Vegas. We're seeing the stock market crash because interest rates spiked a smidge, but we still have a ton of cash buyers. We have a supply and demand issue. Housing prices are still continuing to rise. We don't see a market crash. We may see a little bit of a market soften when some buyers go away because of those interest rates. And inevitably, rental rates are going to continue to increase. So if you're in that boat of being a renter, just know that and try to prime for possibly a purchase. Put yourself in a little bit of a better situation. Keep your eyes on a swivel. I think the housing market is going to be something spectacular still in 2022. Many investors are still buying. I know that I am, and everybody around me is. So we're excited, and I hope that you are too. Remember, at the end of the day, if you have any questions about anything real estate related, who's your homegirl? I'm your homegirl.